Hey guys, Steve here with the strategy session for July 31st, 2014. We had some fireworks today at the end of July instead of the 4th of July. Markets were down huge today. Really tough day to be long. We kind of identified that this was a possibility. I didn't think it was all going to happen in one day, of course, but as everybody says, the escalator up and the elevator down. So, part of our plan obviously is that we have stops in place for when they get hit, and when they do get hit, we execute without question. So that's what we're going to do today. We're going to review everything, review the positions we have. I know personally I had about 3 or 4 stops get hit. I haven't actually even looked at the positions that we have on yet. We're going to do that together right now. Before we get into that though, and into the analysis, I just want to make you guys aware there are going to be a couple changes with the blog format. I'm going to kind of move some stuff around on the blog over the weekend. Really set up more different types of video series. I'm going to make a series out of the anatomy of a trade. I'm also going to start doing an educational series because I got some feedback that there's the topics that we're discussing are maybe a little bit too over new people's heads. Specifically my wife told me that, actually, and my father. So I'm sure there's other people out there that are in the same boat. So really what we're going to do with the free trade is there's going to be one free trade video a week, one anatomy of a trade video a week, one market analysis video a week, and also one we got the free trade, the analysis, the anatomy of a trade, the analysis, and one educational video. So I'm trying to set it up so that each morning, Monday will be the market analysis for the week, Tuesday maybe the trade, however I set it up. But I'm looking at doing something along those lines and really make it more of like a video series for the free side, because I do think the free trade, being that it was 20-something days that we reviewed the same trade, I don't think that was helpful after a while. I think if we can look at its stock every week and see how it's acting, I think that's going to be just as helpful as what we did. So, like I said, a couple additions coming. I'm going to restructure the blog a little bit to make it a little easier to get to. So just to be aware of that in case you see something a little different. But with that said, let's look at the markets. S&P 500. We had identified this consolidation area in here that actually today was broken. It broke trendline support, broke the 50-day moving average, and we're down here now testing this 1922 level. If you look at the weekly chart, it looks like, which is this line here, corresponds to the bottom line of the channel. I don't see any reason to think that we don't test 1900. Just the way this came down, I don't see, it's only 25 points away at this point. There's no reason for me to believe that this line here, however you want to draw it, maybe it's like that, that at least we come back down for another week or so to really test that 1900 level, bottom of weekly channel. I think that's kind of where we're headed. The NASDAQ was the stronger of the two. This is still above the 50-day moving average. As you can see, this red line here is the 50-day moving average. But again, it did break trend line. But the difference with the NASDAQ and the S&P, and even the Dow, is you'll see the S&P actually broke the previous consolidation lows, right? Broke this low, it broke through that. The NASDAQ did not. This is actually still, at this point, making higher lows. Okay, here's a higher low, and until we break this 38.57 level, we're still at a higher low. And I'm looking at it here as 50 days going to maybe catch up, and this 38.57 level and the 50-day may meet, and that might be where our bounce point is. But for right now, there's no other way to tell you it was ugly today. So again, Dow, we broke numerous support levels, broke the moving average, we broke the bottom of trend line, bottom of consolidation, we broke trend line. So right now, in all honesty, the next spot for the Dow that I see is right around right here, 16,360 and 16,278. So somewhere in there is where I see, next support. So I mean, like I said, for right now, it's more about managing risk than, we'll take new positions if they present themselves. But as far as today goes, this is just a day that we have to honor our stops, and we're going to go through our positions and do that right now. As you could see on the watch list, there was one stock the whole day that was up, Broadcom. Okay, so Broadcom is still somehow hanging in there. I don't know what happened today that it wasn't down, but we had other stocks that were down 3%, breaking support levels. So we're not even going to look at a new position. We're just going to go through our positions right now. So Apple, first one is Apple. Apple's still hanging in there. Trend line support is still intact. Bottom of previous consolidation still intact, and 50-day moving average still intact. That one stays. ADM, we exited ADM on the free trade this morning. ADM I still see coming back into this between 45.22 and 45.92. I think that's a good spot, So you're looking at it now, with everything going on, I still think that this trend line holds with this channel. But for right now, we're still above previous. I wouldn't even call this a low, but previous consolidation, which was really only 3 days. I would be, to be honest, we should really have our stop here at this 45.22. And looking at it, I think we may have trailed stop up a little bit too quick. So, it's right to be. I find it okay to go down with a stop if you feel that your analysis is leading to a different conclusion that you had before. So, at this point, I'm really looking at this area here, this 45.22. Fact is, if that breaks, that would break 50-day moving average and trend line support. So 45.22 is going to be the adjusted stop on ADM. American Tower was holding up well this morning, and then the end of the day, not so much. But look at where this is. This is still in the middle of yesterday's range. Okay, so this is a strong sign. As much as it sold off 2% today. It didn't break yesterday's low. Not even close to our trend line. So that one, no issues there. APD, we finally got the break of this little bear flag, okay, or bull flag, I'm sorry. So coming back down, we're at trend line. Our stop is still down here at more of a longer term trend line here at this 127 area. So if that came down, that would break the 50-day moving average, previous consolidation lows, and trend line support. So as you can see, I'm kind of lining these things up, where we have two or three overlapping and trend lines or moving averages that really identify where that stop should be. And that's one of the reasons I added the 50-day moving average in, so we didn't get, where we move stops up extremely quick and, disregard the longer-term trend. Look at this longer-term trend in EQR. Essentially, the 50-day moving average has supported it since the beginning of the year. So why would we get out if the 50-day moving average wasn't broken? These are accelerated trends, but the analysis that we have is a longer-term time horizon. So I still think that we are breaking this accelerated trend. We're starting to break this little consolidation area here. So maybe we come back and test this 63.16 level. Fidelity. Okay, same thing here. We have a little bit of a more accelerated trend coming through, but we're right in that box still. We're right in consolidation. Again, not a lot of selling pressure today. Still holding this 54.71 is our stop, which is this little consolidation in here. So again, 50-day moving average, trend line support coinciding. So a break of those two and that previous low would really be a good indication that we're wrong in the trade. Honeywell. Finally got our exit in Honeywell. This was, I'll be honest, I've never had a trade for 4 days or whatever. What is this, 2 weeks? To go down almost every single day since we've entered. I don't think that's ever happened to me. So there's a first time for everything. Unfortunately, you guys are along for the ride on that one too. We are going to exit Honeywell today, okay? Or tomorrow morning. Here was our trend line. Okay, we're right back in consolidation. Nothing wrong with the longer term. I mean, this could come back down to 90.35 and be fine on the weekly chart, right? That's where our consolidation levels are on the weekly. 90.30, 90.35. All right, it's a failed breakout as far as I'm concerned on the weekly. So maybe it just needs some more time to set up. But, you know, we're not going to hold it to see, oh, well, is it going to hold $90? I don't care if it holds $90 because our analysis was this trend line was supporting. It was a breakout, and that analysis is no longer valid. Trend line support broken. 50-day moving average broken. Previous consolidation lows broken. It's time to go. All right, time to exit. So we will exit Honeywell tomorrow morning at the open. Wyndham Worldwide still intact. Longer term trend still intact. Trend line still, is breaking. Our previous consolidation resistance, which we're now using as support, coinciding with the 50-day moving average. So for right now, this one will remain in the portfolio. We could adjust this trend line just a little. It's kind of tough because this one doesn't really have too many points to go off of. But again, just look at something maybe more along those lines like that. Okay, so I still think 75.13. Really, the $75 level has to hold. Okay, just to take you through, I want to show you a couple positions that I have on. And all of the ones that are highlighted in blue, as of 12 o'clock, I tweeted out, those were exits for me. Mondelez, I exited this morning with you guys. So, I follow the same process. I go through, I see what triggers. I don't know what's going on with my computer. You know what it is, guys? Between the trading software and the screen capture software, the computer really bogs down. But so BDX gone, Borg Warner gone, CSX gone, Honeywell we did, Mondelez we exited, PPG gone. All right, guys, there's no reason to stay in these. You really just have to honor your exit and live to fight another day. There's going to be days when this happens and you just step aside. Okay, we're going to put cash on the sidelines. We're going to use it, for new trades when the market and our signals fire off. But there's no reason that to stay in a losing trade. We've identified where we feel we're wrong previously, and now it's time to follow through and don't fight it, because that's where you get in trouble. That's where a 1R loss becomes a 2R loss. And I'm sure some of these I haven't even looked are more than 1R, but just because of the gaps and everything like that. But the whole point of being a successful trader is being a good risk manager. And right now risk is to the downside, and we're going to step out of the way until we can get some better entries. All right, so like I said, Honeywell will exit tomorrow at the open. Be on the lookout for some new layouts and new videos next week, and we'll catch you over the weekend for the weekend update. Take care, guys. Have a great Friday. That's it for today, guys. So if you haven't already, please follow me on StockTwits, Twitter, and Google+, and subscribe to the YouTube channel. And if you like the video, please give it a thumbs up and leave some comments below. Thanks for watching. See you next time.